So MicroStrategy announced that they were forcing a conversion of some of their convertible bonds. And for those of you who don't understand what MicroStrategy is doing, they are issuing fixed income products at low or no interest rate, taking that cash and buying Bitcoin. In return, the people that buy the coupon get the return of the bond, and once the bond matures by a certain date or by certain price action, MicroStrategy forces them to convert those coupons into shares. Now, they don't have to do that. If they decide not to convert into shares, they just get their initial principal back. Well, because MicroStrategy's price action has been so volatile to the upside, no one wants to do that. And so these coupons were not supposed to be converted until 2027. So MicroStrategy forced them to convert, so those coupons would then transfer into shares at a price of $140, something like that. Now, the reason I'm bringing this up is because we've had a ton of questions about MicroStrategy in the forum and at Crypto Market Mentor, and so I just want to explain to you what they're doing. So they're taking the money from the bonds, buying Bitcoin, and then forcing the people who buy the bonds to convert that money into shares. Now, that does cause some dilution, but the difference between normal dilution from doing a convert and what MicroStrategy is doing is that MicroStrategy is buying Bitcoin with that money. And the idea is that they are increasing the amount of Bitcoin you own per share of MicroStrategy every time they do a convert. And that brings down the net asset value. And so, for example, when MicroStrategy was trading up around $530, the NAV to the amount of Bitcoin they had was in and around 3. And so the stock was trading essentially at 3 times the amount of Bitcoin that they had. But every time they add more Bitcoin, they bring down that NAV. And so right now, because they've done so many buys of Bitcoin, their NAV is now down around 1.8. And so what Michael Saylor's trying to do by forcing these people to convert their bonds to shares is he's trying to clear out that debt, essentially. And why would he want to do that? So he can issue more.
You can't do this with a security. Like, I couldn't do this trade with NVIDIA stock. Even though it's a great company, NVIDIA stock is a security, so I could never own 100% of my liquid capital or have it invested in NVIDIA. So if you wanted to do this before Bitcoin, you had to do it with gold, soybeans, oil, or real estate. And they all underperform the S&P, and they all have less vol in the S&P. So if your hurdle rate is 15.15 and you're showing me real estate, which is 10.10, the trade doesn't work. And so what we're doing is totally rational and simple. It's the simplest thing imaginable. If you accept the premise that Bitcoin is a real asset, that it is a commodity, and then it's 21 million, right? And once you get that idea, everything else follows naturally. And until you get that idea, you just think it's crazy magic.
Because historically, Bitcoin goes up 29% or more every year. And so if they can continue to issue these convertible bonds out into the future, the idea is the price of Bitcoin will continue to go up over time. It'll go up, it'll go down, but over time, in 5 years or so, the idea is it's going to be higher than it is now, and that's going to continue to allow MicroStrategy to keep this machine going. So I hope that makes sense in terms of the mechanism that they're doing. They're issuing convertible bonds, they get that money, they buy Bitcoin, Bitcoin goes up, the stock goes up, they then force those older bonds to convert. Now they're clear to issue more. And so Saylor can keep this going as long as he wants. All that matters is, can they make their debt obligations? And as long as they can pay off that interest, then they can just keep buying more Bitcoin. And so for those of you who don't know, these are the converts that they just converted. And these people from February 2027, so they're converting it 2 years earlier. And the reason they're doing that is because they want to issue more. And once they check all of these boxes off, then they have the ability to, again, go back to the market and say, okay, who wants the next round? Because these bonds aren't just good for MicroStrategy, they're good for the people who buy these bonds because they're the best performing bonds in the market right now because of the volatility of Bitcoin. And so MicroStrategy is leveraging the volatility of Bitcoin to keep this machine going. Now, I don't know how it's going to end up. And so I have said from the beginning that MicroStrategy is a great trade as long as Bitcoin is in an uptrend, because historically MicroStrategy has outperformed to the upside. But if we ever get into a Bitcoin bear market or anything like that, MicroStrategy will outperform to the downside as well. Again, but what they're doing, they're leveraging the volatility of Bitcoin and plugging that into their stock and going to the market issuing fixed income products, because typically fixed income products are low volatility. But the reason these people keep buying them is because of the gains that they're getting. They're getting high volatility bonds risk-free, because Saylor can issue as many shares as he needs to pay off any debt obligations. So even if Bitcoin went down,
the answer is Bitcoin goes to 10,000, the bonds are going to pay off at par. You might not get 3x your money on the bonds, but you're going to get your money back because the company has enough assets and enough equity that will just equitize the bonds, and it'll be dilutive to the common stock.
Just press pause there. The business intelligence side of the business creates enough cash flow to support the bonds even if Bitcoin declines dramatically.
No, the point is you don't need cash. The bonds are free. I mean, you don't need cash flow to pay the interest. If you're talking about the principal of the bonds converts to equity, right? You're basically paying out equity. So the risk if you assume Bitcoin goes down 90% is to the equity. It's the MSTR, right? They're the ones that are taking the risk. The bonds are going to pay off. And so, look, Scott, the point is, if you put 100% of all your wealth into our bonds or into our equity, and if Bitcoin goes to zero, then you will lose money.
And you're not suggesting anyone does that. Yeah.
And then if you ask the question, well, how does MicroStrategy look at it? My answer is, I'm selling the volatility. So for example, if I sell $1 billion bond, I'm capturing an 80% spread up front. So I'm making $800 million in Bitcoin. If Bitcoin crashes by 80%, then I was neutral, right? So if Bitcoin went to 20,000 tomorrow, you could say, you didn't make any money on that. But if Bitcoin doesn't crash 80%, I made 800 million. Now, if Bitcoin goes down 20 or 30 or 40%, Bitcoin's volatile. My stock is twice as volatile. I'm going to refinance it and sell the volatility. And the theoretical value of having $1 billion of volatile asset is like 100 million a year. Like for example, all I have to do is hold the $1 billion and then sell the vol, and we probably make another 500 million to $1 billion, even if Bitcoin doesn't go up, even if it goes down. So, right. So it's a no-brainer for us as a corporation, because we're getting the float and we're getting the volatility, and then we can equitize or refinance the volatility between now and when it comes due. If you want me to say, what's the doomsday scenario? Well, it's the same scenario you have, Scott, which is if you walk out your door and you get hit by a truck or a meteor, you're dead. So it is possible you could get hit by a meteorite and then you're dead. And it is possible for an extinction level event to happen to Bitcoin, a meteor. And if it does, everything is definitely levered to that. But if it happens, it needs to happen quickly, immediately. Like, for example, if Bitcoin goes to zero tomorrow forever, without incontrovertibly, right? That's not good for our business. But if Bitcoin simply trades down and stays volatile, if Bitcoin was cut in half and stayed as volatile, Well, there's a lot of people that will want to buy MicroStrategy stock and MicroStrategy bonds, and they'll want to buy. If Bitcoin was 50,000, there would be a massive demand for people for a convertible bond struck at 50,000 for people to ride the upside and avoid the downside of that, and we would sell that one, you see. So our business kind of works no matter what happens, as long as Bitcoin continues to be interesting, volatile, etc.
The more you research it, the more you understand, okay, this is a high velocity vehicle for Bitcoin, and that's all I need to think about it. Don't worry about anything else. Just think MicroStrategy, 2x Bitcoin. If I want 2x Bitcoin or more, that's the trading vehicle that I want. And that's how, in my opinion, you have to really think about this thing, because I could talk an hour or longer just on what MicroStrategy is doing, and at the end of it, you'll be like, that's a lot. Cool. Now, how do I make money? And you make money by the chart pattern. So, in my opinion, MicroStrategy is actually trading exactly how I expected it to. You know, if you go back to our webinar that Dan and I did the other day, I mentioned how MSTR was above the 50-day moving average, and I kind of expected it to do this up into earnings. And then we'll see what happens after earnings. And it's doing that. So, you know, in terms of a trade here, I don't really have one for you, but I would have an alert on MSTR, probably above 400. And if it does break and close above 400, I think that could be an entry here. But don't get too deep in the weeds when it comes to the convertible bonds or the IRS or anything like that. Just focus on the chart pattern. The chart will tell you everything you need to know. And right now, unless you have a cushion in MicroStrategy from long below or maybe down here at 300, you know, I just don't think you need to do anything with this stock right now other than set some alerts and watch it. I'll see you Monday.